Hey folks, I'm Doug Hensley, president of Hertz Real Estate Services, and I'm coming to you again with our December 2024 Farmland Market Update, our final update for the year. Here at year end before Christmas and all the holiday hoopla, it's common to look back and take stock on the year that was as we prepare for what's to come in 2025. And when we look back, this past year is sure to be viewed as a year of transition. The most obvious agricultural transition in 2024 was a shift down in ag commodity markets from recent year highs into a more historical pattern of being at or around break-even levels for most farming operations. This squeezed profit potential in our 2024 crop and has everyone sharpening their pencil for 2025 budgets. Another transition this past year was in the interest rate markets. Late this summer, the Federal Reserve started cutting short-term rates following their dramatic rate run-up in 2022 and 2023 in order to stamp out inflation. These Fed rate cuts dropped money market fund returns and cut borrower rates for some short-term loans, but we're actually ending this year with slightly higher farm mortgage rates than we had last January. What's all that about? Well, this tells me that the bond market has some concern with longer duration loans, and I think the market is saying, I'll loan you the money, but I need to be paid more because risk is being priced differently than it was a year ago. So keep your eye on mortgage rates in 2025 as they can be telling for future economic expectations. The drop in commodity prices and the slight trend up in farm mortgage rates has pressured the farmland market this year and has definitely created transition there. It's been widely published that land values are down 5 to 10% in most areas, and anecdotally, even a bit more in some areas, especially for B and C quality land. A quality land in most neighborhoods has been stickier, as is typical, and seems to have firmed actually just a bit since the end of harvest. Market-wide, however, there have been fewer public auctions and there have been more private sales, either privately negotiated brokered sales or sealed bid sales. I expect this to continue in early 2025. Had we not grown the huge crop this past summer, I think we would be experiencing even more stress in the land market. But the big bushels this fall helped us outperform the economic stress that descended on the market earlier this year. It is clear to me that most farming operations, despite the great crop, are ending this year with tighter finances than 1 year ago, which makes land buying decisions more important than ever to get right. So people are being cautious. The last big transition of the year involves the expected direction of the political and policy landscape, the bigger impact of which we are likely to see and feel in 2025. Whether you view this as a good thing or a bad thing, things are sure to change this next year, including tax, trade, environmental, ag, and farm bill policies, among many others. All of these decisions will impact our ag industry and subsequently underlying farmland values, so something to keep your eyes on. If this seems like it's a lot, it's because it is. There are many cross currents right now, and reading the tea leaves in today's farmland market is way more complicated than it was a couple of years back when corn was $6 and beans were $14. But keep heart and know that we're here to walk with you through every aspect with your farmland holding. So as always, reach out to us anytime at hertz.ag with any questions that you may have, and we'll be ready to help you make confident and informed decisions. Enjoy the holidays, folks, and I'll see you next year.